What's going on, guys? We're going to be taking a look at the overall Nasdaq 100. What we are looking at here is the 1 hour time frame on /NQ, which is the Nasdaq 100 E-mini contracts. So what we kind of want to look at here, if you're learning how to trade futures, understand what you're trading. First of all, if you have a smaller account size, or maybe let's say you're a funded trader and you have a daily loss limit that you need to stay within, maybe trading the NQ is not going to be best for you. Might want to trade the micros, which is going to be /MNQ. With that being said, we quickly tried to break out of a channel range today. That channel range was 12,900. We quickly broke above that in the pre-market after hours session, and then we kind of had this big sloping rounding top here. So one thing that I do want to kind of point out, we were at the top of the channel. That price was sitting at around 12.9. We did start to roll over here. Now, when things really started to get a little saucy and dicey was when we really started to lose the 20-day moving average. Things really started to accelerate. If you kind of look at this red line here, this is a 50-day moving average. This line is always going to be a very, very hard point, meaning that if we're trading over the 50-day moving average on any time frame, whether you're a scalper trading the 1 minute or the 2 minute or the 5 minute, if we're trading over the 50-day moving average, you want to be going in the direction with the trend, which is going to be long. If we lose the 50-day moving average, then you're going to want to be more short biased and looking more towards the downside. Now you can see here when we initially lost the 50-day moving average on the 1 hour time frame, this was right here as the market opened. And let me kind of zoom in just a little bit. So if I go to 6 a.m. Pacific Standard Time here, when we lost this 50-day moving average and closed below it, the following candle was a very aggressive candle to the downside. And if you kind of look at where we stopped right at a level of demand, and that demand level was the 150-day simple moving average. Now, the way that I trade is a little bit different than the way a lot of other people trade. There's a lot of moving parts. So all of the lines on my screen, they're all going to signify something different. They're all going to signify a different level of supply and demand. And if you can kind of think back to when you were a kid and they said, kind of stay coloring with inside the lines. So basically for me, based on technicals, when a stock clears out a level of supply, I need there to be enough room for me to get long and trade into the next level of supply. When a stock loses a level of demand, I need there to be enough room that I can get in and make enough money to the downside to the next area of demand. So if we kind of paint a picture here, as soon as the Nasdaq lost the 100 EMA, okay, you can see this line here. We got a nice gap to be filled all the way down to the next level of demand, and that's exactly where we stopped. When we confirmed this level of demand loss, we traded all the way down to the next level of demand, okay? When we could not confirm to the downside, the next time we got a nice bounce, and that bounce came up to, not rocket science, the next level of supply. When we could not confirm the next level of supply, we came back down. Now, this sounds easier said than done, but if you kind of just wait for the confirmations and you color in between the lines, things can make a lot more sense. So if we're looking at this from right now, present, real-time, live, currently it's 11:52 a.m. Pacific Standard Time, we are trading below supply. The two levels of supply that we're trading below is the 5-day moving average, as well as let's see which one this is here, the 150 simple moving average. Now, if the Nasdaq can get back over these two levels of supply, then we have a maximum potential to run up to the next level of supply. This is where you're going to want to get long on the confirmation going above these levels into the next area of supply. If we quickly crack above it, stall around, lose this level again, lose the 5-day moving average, then our maximum potential is the previous bounce spot, which was the 200 EMA. You kind of make sense. I hope you guys are picking up what I'm laying down. Now, your short position here, if I'm just looking at the chart, being that we've held this area, this key zone for 1, 2, 3, 4 hours in a row, my short position is going to be pretty easy. It's going to be a short position through 12,508. Why is that? Because our next level of support is going to be a previous catch point from the last bounce at 12,439. So I would look to get short on this confirmation to the downside and look to take profits into this demand zone. Now, I really don't want to get long until we can take out this hour's highs, and that price is sitting at around 12,604. From 12,604, we have room into the next supply zone at around 12,642. So this is going to provide you with a little bit of a scalping opportunity into the supply zone. Just make sure that you understand that it can stop at any point in time underneath supply. You want to take profits into that supply. Just understand that when we do break a level of demand, they can pull it at any point in time. So you want to be taking profits on the way down. And when it starts to stall and chop around and starts to move its way back up is when you're going to want to lock in those profits. I hope this video makes sense. If you guys are interested in learning how to trade futures, maybe you guys are interested in learning how to trade with someone else's money, working for a prop firm, check the link down in the description box below. I work with a great prop firm. We get you guys funded up to $150,000. Also join the Discord, like, comment, and subscribe, and I'll see you guys all in the next one.